Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And every week I bring you guys more information, new information, whatever we've got going on in the real estate world. I focus mostly on mortgage since that's what my team and I do. But we talk about all things real estate. I want to remind everybody that this is an interactive show, so you are more than welcome to put your questions into the feed. I'm going to read them and answer them out loud for everyone. So please get interactive with me. It's great to answer those questions because if you have that question, many times someone else has the same question, if not many others have the same question. So I want to make sure that I'm bringing the content to you that you need from my show. If you're here and you're watching, jump on and say hi, let me know. My biggest fan ever, my dad, has already jumped on and said, hey there, sorry I missed it last week. Actually, Dad, I didn't do one last week, so you didn't miss anything. You didn't get the text and nobody said that I was live. So you are good. But that does bring me to another point is that if you do want to do this with me live every week and you are listening by radio, who I love all of my Go Country listeners, you have to know when I go live. And the best way to do that is to opt yourself in. You will get one text message per week letting you know that I'm live with a link to join. So how do you do that? Well, you're going to text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That will get you one text message per week. I promise I don't spam. I don't send you anything except for what we're talking about that day and the link to jump in and join the show. Now, that is also the telephone number to reach our office. If you have questions, you want to talk to somebody, you want a phone consultation, you want to know if something that I've talked about or even just something in life that is, a situation of yours and you're trying to figure out how best to make it happen and you want to call the office, we are here. We are all ears. That is what we do. We're going to give you that education that you need and then get you on the right path. We do mortgages for a living, so of course we'd love to earn your business, but we're first and foremost education. And so we are going to make sure that we get you pointed in the right direction to get started. Whether that's your game plan to become a homeowner, whether that's, being a homeowner already, but you find yourself in debt. And that is what we are going to be talking about today. So many of you, as you got my text message, are equity rich. Many people, if you've purchased a home or you own a home, you find that your house is worth a lot more money than what it used to be. So many of you are very equity rich. You're cash poor. They've been killing us out there by raising those rates, raising the prices at the gas pumps, raising the prices at the grocery stores, raising the prices on our utility bills. So they've been killing us, and many of you have drained your savings and you guys have debt. You've been using your credit card debt. So I did read a couple of articles that are saying that we are right now the highest ever in history of equity in homes. We are the lowest ever in history in savings, and we are the highest ever in history in debt. So I know that the majority out there of you can feel it, you understand it, you're hearing me, and you know that this is something that's a reality. So what's really important is, how do we get you out of that debt? What are those options? And we've talked about them numerous times on the show, but it's been probably a good 6 to 9 months since we've explored those home equity and home equity loan options. So you've got home equity lines of credit and you have home equity loans. Now I'm going to focus today on home equity loans because I like them the best. I think that home equity lines of credit are great if you are somebody that has an overwhelming amount of cash in your pocket and you plan to utilize the home equity line to use it, pay it back, use it, pay it back. It's not something that you're going to keep outstanding for any particular period of time. So if you're somebody that is in debt and you need the cash to pay the debt off, then you don't have the cash to pay the debt off. So you are going to actually hold on to that debt for quite some time. So we need to make sure that you're in a fixed rate payment, that you're in a monthly payment that you can afford to continue to pay every month. And a home equity line of credit is an adjustable rate. So that interest rate is going to go up as they continue to raise the rates. You're going to see that payment get more expensive each time. So we want to get you into something that is a fixed rate, that you don't have to worry about your monthly payment changing. It will eventually be paid off if you stay the course, and get you out of the debt that you're in, all while utilizing that equity that you have in your homes. So we're going to talk today about a brand new program that we have available to us. It is all in-house, which is fabulous. We can close it in as little as 10 days. Now I say in as little as, because it truly depends on you. It depends on, how fast that you get us the items that we ask for, how complete your application is up front. So I do want to make sure that you guys hear that. How complete is your application up front when you give it to us, right? That is a problem that we run into quite frequently, because people try to hide things. They try to not tell us things. And as we dig, as we start to look at paperwork, we're going to find it. And another question is going to come up, and another question is going to come up. And that is what can drag on and delay the process. So you want to make sure, if there's something that you know about, that you are getting that information to us, and you're telling us that information right away, right up front, during that phone consultation that I mentioned at the beginning of the show. We need to know, what do you got going on? What is happening? Have you not filed your tax returns yet? Do you owe money to the IRS that you haven't started a payment plan yet? Have you recently taken out a personal loan? So we're going to see that deposit in a bank statement. There's things that we're going to find that are going to bring up questions. And so we need to make sure that you're giving it to us all up front, so that we're addressing it, putting your application together correctly, and making sure that it gets submitted fast and approved the first time. So that's the first thing that I do want you guys to all hear. But we're going to get into these equity loans that we have available. It's a great product. Like I said, we're doing it in-house. It can be done in as little as 10 days. So if you have debt, you're equity rich, and you're cash poor, I don't want you to go anywhere. We're going to talk about what those options are and how those loans work, and what do you need to do, what do you need to have, what kind of credit score is required for you to qualify. So stay tuned. Don't go anywhere. We're going to take a super quick commercial break, and we'll be right back. Are you self-employed, but you're not really showing all that income on those tax returns? Well, we've got loan options available for you. The first one we're going to talk about today is the bank statement program. We're going to take 12 to 24 months of your bank statements, and we're going to calculate the deposits that are going into your personal and business accounts on a monthly basis. From there, we're going to determine what income are you truly earning monthly. That is going to help you qualify for financing without those tax returns. Now, even better, we go down to a credit score as low as 660, but for those great credit scores, we can get you in with as little as 15% down. It's a wonderful program, super awesome option. If you're self-employed, if you're writing it all off and you didn't think that you could secure financing, well, now's the time to call us. Call Mortgage Mom Radio at 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Manny. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today, we are talking about home equity loans. So getting a second mortgage put against your property to get your debts paid off, maybe do those home improvements that you've been thinking about doing, and why is this a great option for you? So let's, number one, talk about who this is good for. I already mentioned, if you are equity rich, you are cash poor, and you are debt high, that this would be something that would be worth it for you to be looking into if you are a homeowner. Now, what are some other reasons why you would look at doing this versus possibly doing a refinance? So we need to look at your blended rate, right? What do you owe on your first mortgage? What is your interest rate currently on your first mortgage? Many of you out there have first mortgages with super low interest rates, and you've all heard me talk about that as well in previous shows. You might have an interest rate that's as low as 2%, 2.5%, 3%. 3.5%. The majority of homeowners have interest rates that are under 4% right now. So if you have a mortgage that's $400,000, $500,000, $600,000, and you're at an interest rate of 3%, and you need $50,000 to pay off your debts, or you need $100,000 to pay off your debts, you are going to be in a better blended rate by doing two loans versus one whole brand new refinance. Now, if you have a $400,000 loan at 3% interest rate, and you need $400,000, $300,000, even $250,000 to do a big, huge home improvement project, well, now we need to look at the blended rate. Most home equity loans are going to have an interest rate that's going to be somewhere between 9% and as high as 14%. So what determines that interest rate? Well, of course you do. So how much you owe on the property, your loan to value. So how much equity do you have? How much are you trying to pull out? What is your credit score? What is your debt to income ratio? So we're going to look at all of these different things in determining what your interest rate is. But let's just go with a basic 10%. Let's say that this home equity loan is at an interest rate of 10%. If you owe $500,000 and you have an interest rate of 3%, and then you need $250,000 or $300,000 to put that at 10%, the blended rate on that is probably lower by just doing a whole brand new refinance. But if you are somebody that owes $500,000 and you need $50,000 or $100,000, you are definitely paying at a much, much lower interest rate by keeping the two loans separate. Now, when interest rates do come down in the future, hoping within the next year, then we can always look at doing a refinance to consolidate everything into one loan to then also reduce that total interest rate that you're paying for all of the money. But for right now, in today's circumstances, in today's environment, you would be better off in two separate loans. So let's assume you need two separate loans, right? Let's talk about who we can do this loan for and what is so great about our new home equity loan that we're offering versus some of the home equity loans that have been around for quite some time. So the first thing that I want to talk about is that we're going to qualify. So number one, I'm going to back up a minute. This is huge. So many of you over the past 3-4 years have actually called me and needed to get a home equity line or a loan on an investment property. It is very, very difficult to find that product. Most companies will not do an equity line or an equity loan on an investment property. So our new program is allowing for primary, second homes, and investment properties. So if that is sparking your interest, you want to reach out and give us a call or go to the website, mortgagemomradio.com. Do not forget the radio, but get in touch with us because we have a product that would work for you if you're an investor and you've been trying to get some money out of your primary or your investment property. So, number two, this is a big one. We are going to qualify you based on the primary wage earner's income. So, this means that if your primary wage earner, the person, let's say that you have two people on the application, whoever makes the most amount of money is who we're going to call the primary wage earner. So let's say that they have the credit score that's going to get you to qualify for this home equity loan, but you as the secondary income, which is needed to qualify, has a really low credit score. That is okay. We're still going to allow both incomes to qualify, and we're going to utilize the credit score from the primary wage earner. So if you have, a 700 credit score and you make more than the second person, husband, partner, friend, whoever owns this property, parents going on to help you co-sign, as long as the primary wage earner's credit score is where it needs to be, we're going to look at all income allowed, and we are going to allow the low credit score to be part of the application. So this is actually a super huge piece of information. You may have found trying to maybe get this kind of a loan before that you didn't qualify because your credit score wasn't high enough. Now, we really don't care what that secondary person's credit score is. It can be really, really low, even like a 550. But we are going to look to make sure that there haven't been any major credit events like a bankruptcy or a foreclosure, to give you an example. So if there's been something major take place, then that would actually not allow you to move forward. But if there hasn't really been anything that was major, you just had some maybe late payments on some credit cards, or you missed a car payment, or maybe you had some collection accounts pop up, you're probably going to be okay to still be the cosigner and still help with income to qualify. So this is huge. This is something that is very difficult to find in this type of a loan. So I did want to bring that up to all of you. Now, if you have had a loan modification, which many homeowners have had because of COVID, many of you did do a loan modification, you did a forbearance, you didn't make payments, then you went back and you modified the loan, and they took the balance of all the payments that you didn't make and they popped it on the end of the mortgage, and now you've got this extra amount that's due. We can use the new home equity loan to pay off that balance that you owe. So that is something that is allowed. But you cannot have any late mortgage payments in the last 12 months. So no late payments, no late mortgage payments in the last 12 months. Loan modification, okay. Bankruptcies and foreclosures, not okay. Primary wage earner needs to have a minimum of a 660 credit score. So as long as your primary wage earner on the application has a minimum of a 660 credit score, your co-borrower could actually have as low as a 550 credit score. So this is, again, really a fabulous, perfect home equity loan option to get those debts paid off. All right, we can do up to 90% in your combined loan to value. So what exactly does that mean? That means that whatever your home is worth, let's call it $1 million because it's an easy number for me to do sitting here in the studio, but let's say your home is worth $1 million. We can go up to a combined loan amount of $900,000. So if you owe $700,000 on your mortgage, and that would be pretty common for California, but if you owe $700,000 on your mortgage, you'd be able to get $200,000 in a home equity loan, bringing you up to the $900,000 combined. So that's actually pretty awesome as well, with that 660 credit score and that co-borrower that maybe doesn't have such great credit. You must have owned the home for at least 6 months. And yes, I'm looking down. I had to make notes. There were so many pieces that I wanted to make sure that we hit on today. So you do have to have owned the home for at least the last 6 months. So if you purchased the home 3 months ago, 4 months ago, and you're trying to get some equity out of the property, you need to wait just a little bit longer. But you do need to have owned the home for at least 6 months, and then we would be able to look at doing that home equity loan for you. I do want to say that Heather jumps in and she says, hi, everyone. And Nicholas jumped on and gives me the clapping hands. So Nicholas, thank you so much for joining as well. And I do want to remind everybody, if I say something that doesn't make sense, if you have any questions that you want to know, you want me to dig in a little bit deeper, this is an open conversation. Please do not hesitate to put those questions into the feed, and I'm going to read them out loud and answer them for you. Heidi jumps on and Heidi says, hi all. So Heidi, good to see you as well. And again, you guys, let me know you're here. Let me know you're listening, and make sure that you jump in and ask those questions. I want to make sure that I get the information to you that you need, that you want to hear, because if you need it and you want to hear it, so many others that are listening probably want to hear it as well. Carrie also jumps on and says, hey y'all. So Carrie, thanks so much for joining as well. Okay, so I want to remind everybody, if you're listening by radio on Saturday, you're late. You could have watched me do this live on Wednesday, like Carrie, Heidi, Nicholas, Heather, and my dad are doing. You could have joined in, you could have been interactive, and you could have asked your questions. So how do you know I went live? How do you make sure that you jump in and you join? Well, you get a text message from me. So text the word MOM to 844-935 3634. That's 844. We lend for you. WELEND and the number 4. Now you can also call that number. So if anything I'm talking about today in this home equity loan sparks your interest, you got to pick up the phone and you got to call. Now, anybody on here right now, listening on YouTube, listening by podcast later, or even on radio, we answer the phones 7 days a week. And if you get a voicemail, that just means we're on the other line. We will always call you back if you leave a message in the general box. So please don't hang up when you get the voicemail message. It doesn't mean that we're not going to return your call. We absolutely will. So please leave your name and your phone number and we will call you back. And even if it is Saturday or Sunday, you will hear back with us within an hour, 2 at the very most. So please make sure that you do contact us, leave that message, and leave us your information so that we can reach you. All right, so back to these home equity loans, which I think are fabulous. And this is great because, again, as I mentioned at the beginning of the show, this is something that we are doing in-house. We can close them in as little as 10 days. Also depending, like I said at the beginning, on how complete that your application is. So if you don't, please don't try to hide things from us. Give it to us. Give us everything. Give us the gory details. It's our job to try to help you through the process to get your application put in the right way, and come out approved and on the other end and get your debts paid off or get you the money you need for those home improvement projects. But we can't do that if you don't work with us. So please don't hide it, because we're going to find it, and it is going to make the application process go longer and longer and longer, and you're not going to be one of those people that close in 10 days. So Carrie did jump on and says, we do have another investor that will go down to a 640 credit score on a fixed second. So yes, we do, but I'm talking about our in-house one where we're using primary wage earners income to qualify. But yes, we do. We've got many home equity loans and home equity lines available. So if there's something that somebody needs that you don't hear in this show, like Carrie mentioned, reach out anyway. If you've got particular circumstances that you need us to try to work around, please reach out. Let's see if we've got an investor that we can get you over to that can help you to get your goal achieved. So, one of the things that is really cool that I liked about this program is that we do traditional income document approval. So if you are a W-2 or a pay stub, we're going to ask for those. If you're self-employed, we can get the tax returns. But this investor will also allow bank statements to qualify. So we can actually, just like we do those bank statement mortgages for you guys where you're self-employed, you kind of write everything off, but you can show us the bank statements to get all of those deposits and get that income calculated. We can do that on this program as well. So that's pretty awesome. Heidi says, but the investor will take the lowest credit score of all borrowers. So exactly. So we need to fit you with the right investor, right? So this one that I'm talking about today, 660 credit score, but we're using that primary wage earners credit score, which is huge. We've got 640 credit scores that we can do as well, as Carrie mentioned, but then we're going to use the lowest of the 2 borrowers. So again, if you guys are in debt, right? You've got lots of equity and you don't have any cash to pay that debt off, you need to call us. You need to call us and let's figure out what's the best way, best steps to move you forward to get you some relief, get you that monthly cash flow that you guys need. That's really, really important. So some of these will need an appraisal. Some of them won't. So we're going to talk a little bit about that. I'm going to take a super duper 1-minute break. We get back. We're going to finish up all of the guidelines of this product, and then I'll answer any questions that you guys have before I end the show. So start typing if you have questions, get them into the feed. We're going to take a super quick break. We'll be right back. Do you have assets in the bank and you're looking for a mortgage, but you can't prove your income? Well, we've got a solution for you. We have an asset liquidation program where we're going to look at all of the assets that you have available and calculate based on that how much your monthly income would be. We're not going to write down where you work. We're not going to verify any W-2s, pay stubs, or tax returns. We're simply going to work off of your assets. This is a great program, especially for those that are bond trading or working a little bit in that stock market. Maybe you've got some money set aside in another account for a trust, but this is a great opportunity for those of you who can't prove the income, but you have the assets available. So give us a call. Call Mortgage Mom Radio at 844-935-3634. That's 844. We lend for you. WELEND and the number 4. Or head on over to our website at mortgagemomradio.com. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we're talking about a new home equity loan product that we do have available. It's got some great key features. I did mention that we've got tons of other options as well, so if this one isn't the one that works for you, but there's another one that does, we're going to definitely help to get you placed into one of those products. Now, remember, who is this great for? This is great for a homeowner that's got a lot of equity. They've got debt. They don't have a lot of cash. They need to get that debt paid off. Their current mortgage has a super low interest rate. They're needing $50,000, $100,000, $150,000 to get things put back into place. They owe $400,000, $500,000 on their current mortgage because, again, we're talking about home equity loans are fabulous when we're talking about the blended rate. So if you owe $400,000 and you need $400,000 to do a massive overhaul renovation product on a property, well, then we're probably not talking about a home equity loan. We're talking about a straight refinance, because you don't want to take a home equity loan at a 10% interest rate if you're going to borrow $500,000 and you owe $500,000 on your first. That blended rate would be significantly higher than just one straight new mortgage. But for somebody that owes $400,000 or $500,000, $600,000, $700,000, but again, they've got a much bigger balance on that current mortgage at that lower interest rate, and they need the cash to do some home improvements, pay off some debt, send a kid to college, pay off the IRS, whatever that reason is that you guys need that cash and you don't have it in your bank account, a home equity loan is fabulous because it's not something that you have the means to pay off immediately. A home equity line of credit is adjustable. It's going to move every time the Federal Reserve does. So we want to get you into something that is a fixed rate, fixed monthly payment, isn't going to change, and it's something that you can afford. So right before break, I was talking about appraisals. So not every single application is going to require a full-blown appraisal. Some of them we will be able to do what's called an AVM. It's an automated value from a computer system. Some of them will be able to do a drive-by appraisal from an appraiser, and then others will need to have a full-blown appraisal done. So how do we determine that? Well, it really is basically mostly based on what you say your equity or your property's value is. So if you tell me it's worth 700 and the computer system comes back and says it's worth 500, then we're going to need to send that appraiser out to make sure that that number that you gave us is accurate. And sometimes that can happen, and the appraiser goes out and comes back and value is what you told us. And sometimes computers aren't reliable. Other times it has to do with the size of the loan. So if you're getting a larger home equity loan, like a $250,000 or a $500,000 loan, then we're going to require that we get a full-blown appraisal. You're talking about more money outstanding, so we need to make sure that the property is, worth what we're lending on. So that's very important. But some of them will not require that at all, which also makes that application process go much quicker, gets you the cash you need, gets those debts paid off, gets that home improvement project underway, gets the IRS paid off, gets kid off to college, whatever it is that you need that cash for. But that's why we can close in as little as 10 days. And I say in as little as, because it is important for you guys to hear that. Again, if you don't give us a complete application, you don't give us all your information correctly, you don't spill the beans, your property isn't worth what you tell us it's worth, then things are going to kind of drag out, and it could take longer than the 10 days. But for somebody that gives us everything up front, they give us all of the gory details up front, exactly what it is that they need. They're not looking for a giant home equity loan, something, $100,000, $150,000, $200,000, then there's a really good chance we're not going to need to get that appraisal done, which is going to move that process a lot quicker. So I do want to finish up the show and tell you guys that on this program, it is a fixed principal and interest monthly payment, which is great. We can do it on a term as long as 40 years as far as the monthly payment goes. So we can stretch that out to a 40-year term to keep that monthly payment lower. It would be due with a balloon payment in 15 years if you select that 40-year option. So what does that mean? That means you've got to get that loan paid off in 15 years. But your monthly payment would be based on the 40. We do also have this in just a normal set, 30-year fix, no balloon payment. So it is really a fabulous product. If this is something that sounds like you need it, what do? You call the office, you go to the website, it's mortgagemomradio.com. Do not forget the radio. You call the office, same number you text to opt in to chat with me once a week when I do this live. You're going to call 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So that is it. I don't have any questions in my feed, so I'm going to shut it down short today, but I hope you guys enjoyed it. I hope that I'm hitting people that needed this, investors that have been told no, we've got the product for you. Somebody that's swimming in debt, we've got a product for you. Somebody that's worried that it's, husband and wife, partner and partner, whatever the situation may be, parents co-signing, but somebody's credit score isn't fabulous. This is the product for you. We want you guys to give us a call. We want to help you during this next 9 to 12 months that we've got before we start to see interest rates relieve. And next week, I didn't get to talk about it today. It was really on my plate. I wanted to get into it. So next week's topic, we're going to talk about how Dave Ramsey came out and said, now is the time to buy. If you've been thinking about buying a home, you're a first-time buyer, you don't own property, now is the time to buy. Dave Ramsey is somebody that many, many people look up to. They love his advice. They love what he has to say. So we are going to do that. That is going to be next week's episode, next week's topic. So if you are not a homeowner, you are a home buyer, and you want to hear about that, join me during the show. Get live with me. Text the word mom to 844-935-3634. Get that link. Know when I go live. Jump on. Let's talk. Let's get interactive. I hope you guys all have a fabulous rest of your week, and I'll be back right here again next Wednesday on Mortgage Mom Radio. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.